Hello everyone. Welcome to today's session. So today again, the last two sessions we will be continuing the questions, on various topics, on all the mixed topics, all the topics. So it will be not restricted to any one topic. I would request each and everyone to participate, to ask your doubts, to ask your queries. Okay, to take a benefit of this session, ask whatever doubt you have with respect to any of the topic, whether it's preparation of the exam, whether it's any specific topic, whether it's related to any query of any past lecture. Please ask freely, take the benefit, okay, so that at the these particular lectures can be helpful for you guys. Okay, so let's start today's session, and as and when I'll get your queries, I'll be taking that up. Good. Okay, so let's start. We'll start with the integrated case scenarios, and we'll see how to. In last lecture also we took one integrated case scenarios and we discussed in detail how to solve those integrated case scenarios. Again, over here we'll take another integrated case scenarios, and again we'll see how to solve these integrated case scenarios, within the given time frame, and what are the things that we need to take care while solving these integrated case scenarios. Okay. So during the planning stage of audit of Mobile and Cell Limited, the statutory auditor of the company, ABC and Company, decided to evaluate whether to use the work of internal audit function to gather sufficient and appropriate audit evidence for the purpose of expressing opinion on the financial statement of the company, to perform test counts on sample basis for inventory balance, which was material. Also, the audit team will inquire management to provide copies of management completed physical inventory counts, which will assist them in performing subsequent procedures required to determine whether the inventory records accurately reflect the actual inventory count results. To perform substantive analytical procedures to gather sufficient and appropriate audit evidence for the payroll cost. Audit team decided to recalculate the payroll cost by multiplying the total employees of the company with average payout per employee. To perform substantive procedures over the direct expense, which were assessed as the material with respect to the financial statement as a whole. Moreover, the numbers of item or transaction in direct expense were huge and were of homogeneous nature. As a result, team decided to select some samples from each identified strata, disaggregated to the lowest level based on their characteristics. The performance materiality for assessing any misstatement was fixed at 10 lakh rupees. Okay. Now there are certain other informations also given. So this is something the auditor is planning to perform. Okay, fine. Let's see the other information. If anything is correlated with these paragraphs. So for example, let's say the first paragraph was with respect to your using the work of internal audit. Second paragraph is with respect to your inventory. Third, substantive analytical procedures. Again, fourth, your substantive analytical procedures were there, like to perform the substantive procedures over the direct expense, which were assessed with the material. So they decided with respect to sampling. So sampling plus substantive procedures. Then last, the materiality. Okay, I'm just writing down the paragraph, the detail, one word about the particular line or paragraph, whatever it is related to. Then during the internal audit function the internal audit function directly reports to the management, and they do not have any direct communication with those charged with the governance or an officer with the appropriate authority. Also, all the findings of internal audit function are first reported to the management, and then the management decide what to report to those charged with governance from the finding of internal audit function. Again, this is related to internal audit. So using the work of internal auditor. Okay. Then since last 3 years, the company is making cash losses and facing liquidity crisis. Moreover, there was a huge loan installment due for repayment in next 3 months. Considering the company's liquidity profile, it was evident that the company will default the upcoming loan installment and the payment of interest thereon. When inquired with the management as to how they will deal this situation and how they will consider these events on management's assumption of going concern, the management contended that the company would raise more funds through fresh equity in the primary market to manage the liquidity requirements. Now again, here we are talking about going concern. If you see next paragraph, moreover, there was an ongoing litigation on company and its officer for misappropriating of loan funds. As a result, after analyzing SEBI's listing requirement, it was evident that the company was not in position to issue fresh equity in the primary market. Again, somewhere it is related to the going concern, because see here, in the first one, we were talking about issuing equity shares, issuing fresh equity in primary market to manage liquidity requirements, and that was in connection with the going concern. Now here in the next line, we are saying that that is not possible. So again, this is something additional information with going concern. Then one of the direct tax litigations, the educating authority issued an unfavorable order against the company, because of which the company was now required to pay a huge fine interest tax to the tax authority. The amount of the fine and interest thereon was material. Okay. The engagement manager identified that the total payroll cost booked for the period was 30 lakh for total 150 employees employed throughout the year, and the payroll records and register. Okay. Engagement manager was also able to identify that the average payout per employee was 20,500. Also, the independent expectation developed for the payroll cost was between 30 lakh to 32 lakh for the year. Now, again, your payroll information is given. Earlier in the above paragraph, we saw that they want to perform substantive analytical procedures to gather sufficient and appropriate audit evidence for payroll cost. Substantive analytical procedures for payroll cost. So here they have performed something with respect to the substantive analytical procedure and payroll cost. Now, the audit team performed the testing of direct expenses, and this is the outcome. So there is a table-wise outcome that what expense they tested, balance as per book, total sample value, number of samples they tested, exception amount in samples, and reasons for exception. So all this information is given. Okay, fine. So this is something with respect to the sampling and substantive procedures. Okay. Now, whenever you get any of such table or any such detail, please read it thoroughly once so that you can understand, is there any connection to any other paragraph or anything. For example, freight expense, one invoice was incorrectly booked. Loading charges, there was no exception, so NA. Shipping charges, no exception, NA. Packing expense, no documents were available for the said sample. Storing expense, warehouse charges were booked as storing expense, wrong classification. Total projected misstatement, this much. They have this projected misstatement in total. Now, when I say projected misstatement, again, I need to, somewhere apply the concept of materiality. I'll show you where to apply the materiality concept and how it is, related to the materiality. But as of now, park it down that, okay, projected misstatement, whether the projected misstatement is material or not, I will, see through materiality. Then management allowed auditor to attend physical inventory count. However, management does not allow audit team to perform any other procedure during the physical count. When inquired from management regarding denial to the auditor from performing additional audit procedures along with attending inventory count, the management explained that the inventory consists of very unstable chemicals and inflammable gases which require handling with skill and care. Any carelessness in handling the inventory can result in catastrophe. As a result, due to safety standards and policies, the management cannot allow auditor to perform additional procedures. Again, this is related to my inventory. Okay. So on the basis of the above fact, you are required to answer the MCQs. Now we have, mapped at least everything which is there in the question. Okay. Now let us see which are the MCQs and what topic it covers. First, auditor of the company decided to draw attention to the user of the audit report on existence of the material uncertainty related to the events that casted significant doubt on the entity's ability to continue as a going concern by disclosing the same in other matter paragraph. So, auditor of the company decided to draw attention regarding, regarding entity's ability to continue as a going concern by disclosing same in other matter paragraph. Okay. As an engagement quality control reviewer, guide the auditor about the correct way of disclosing the existence of material uncertainty related to the events that have casted significant doubt on entity's ability to continue as a going concern. When the management has not made appropriate disclosures of a material uncertainty in the financial statement. So, if the management has not made the appropriate disclosure of material uncertainty in financial statement, then what is the correct way of disclosure? Now, we have going concern details and information given to us that there was a company was making cash losses since last 3 years, facing liquidity crisis, huge loan installment due for repayment in next 3 months. Okay, company will default the upcoming loan installment, payment of interest thereon. They were planning to have fresh equity in the primary market, but due to pending litigation or ongoing litigation, it was evident the company was not in position to issue fresh equity in the primary market. Plus, there was a litigation, direct tax litigation, where unfavorable order against the company was issued. Okay, and they are required to pay huge fines and interest to the tax authorities. Amount was material. So there is some information given which is pointing out, okay, there is some, there are some significant events which are casting doubts on the entity's ability to continue as a going concern. Before I proceed to the options, you tell me, how would you disclose such a scenario when you think, okay, this is, there is an, existence, uncertainty, okay, material uncertainty related to certain events that have casted doubt on the entity's ability to continue as a going concern. Those events are present, plus management has not disclosed anything on the going concern or such material uncertainty in their financial statement. How will you deal with that situation? So I am saying, okay, let's say there is an existence of material uncertainty, but management has not disclosed anywhere. How will you deal with that situation? Correct, Janvi. Very good. Come on, guys. How will you deal with this situation? I am saying I have a doubt. There are certain events which are, pointing towards material uncertainty. Okay. which have casted significant doubts on entity's ability to continue as a going concern. If such a scenario is present and management has not disclosed anything about such events, how will you disclose in your audit report? Good, Sumit. Jamie, I have received your doubts. Just I'll after completing this particular question, this integrated case scenario, I'll definitely take up your doubts. So here you need to answer in this particular 16 number question that how will you report the same matter in your audit report when you identify that okay, management has not disclosed anything about such events which are casting significant doubt on entity's ability to continue as a going concern, and you identify such events. How will you enumerate those events in your audit report? Inquiring with the management is the audit procedure. I'm talking about more on the reporting side. How will you report the same in your audit report? Come on, guys. How will you incorporate this matter in your audit report? Let's see the options also. So here are your options. A, when the management has not made appropriate disclosures of material uncertainty in the financial statement, and there exists a material uncertainty related to the event that have casted significant doubt on entity's ability to continue as a going concern, then the auditor should disclose the same in key audit matter section in audit report only. No other disclosure is required. Disclosure of material uncertainty in the financial statement is the responsibility of management, and the auditor should not comment on the same. When the management has not made appropriate disclosures on material uncertainty in financial statement, and there exists a material uncertainty related to the event that have casted significant doubt on entity's ability to continue as a going concern, then the auditor should express a qualified or adverse opinion and should mention in the basis of qualified and adverse opinion section of the audit report about existence of material uncertainty. When management has not made appropriate disclosures of material uncertainty in the financial statement, and there exists a material uncertainty related to the events that have casted significant doubts on entity's ability to continue as a going concern, then the auditor should express an unmodified opinion and should obtain the written representation about the existence of material uncertainty from management. Which option you will choose? Which option you will choose? Good, Namrata. Very good. Good, Janvi. Good, Sumit. Okay. So, see, this is the basic application of the standard. Okay. There is nothing else other than the application that we need to look into. So, when management is not able to, or has not disclosed anything about material uncertainty in the financial statement, okay, then the auditor, and if the auditor has identified if there are certain events which are, of such nature that they are casting significant doubt on the entity's ability to continue as a going concern, means management has not appropriately followed the required disclosure requirements. In that case, you need to issue qualified or adverse opinion based on the, the amount involved, the complexity involved, and how much critical are those events, or how much you can say that okay, there is a significant you can say there's a significant doubt or material uncertainty, to what extent. Based on that, either I will issue an adverse opinion or a qualified opinion, and in the basis of qualified and adverse opinion, I will provide the details about the material uncertainty. That is the option C in current case. Now, option A, key audit matters. So when there is management has not disclosed, see, in the question also it was that management has not made appropriate disclosures. So if that is a scenario, we know that CAM is not alternative to management disclosures. Okay, CAM is not an alternative to a management disclosure. Now, if that is the case, then I know answer A will not be there. B talks about disclosure of material uncertainty, and I should not comment on the same. At least anyone, with the basic knowledge also we will able to identify, no, it's our responsibility to check about the material uncertainty and significant events. So this will also a wrong answer. Now coming to C and D. C will look more appropriate because that is the correct answer. So when you go to the D talks about you should obtain written representation about the existence of material uncertainty from management. Okay. And when management has not made appropriate disclosures, then auditor should express unmodified opinion and should take an written representation. Again, that is something, incorrect. Expressing unmodified opinion and, obtaining written representation when management has not disclosed something. From that, I can identify if management has not disclosed something appropriately, okay, has not made any appropriate disclosures, then this requires a modification. So unmodified opinion will not be a good option for me. Hence, this will also not be a good option. So C is the correct answer. Okay. Any doubt with this? Namrata, I have received your doubt regarding reinsurance. I'll take it after this integrated case scenarios. Okay. Other than that, any doubt, guys? Any doubt with this question? See, when there is a material uncertainty regarding the entities, like there is a material uncertainty and related to the events that have casted significant doubt on entities' ability to continue as a going concern. Okay, in that case, we expect that the management should report and disclose such matters or such event which are generating these particular significant doubts, which are the cause of material uncertainty. If management is not disclosing about those events, then there is a problem. And why qualified opinion? Number one, because of the essay. Number two, there is not so if management is not disclosing, means they have not made disclosure as per the appropriate financial reporting framework, applicable financial reporting framework. If there is reporting is not as per the applicable financial reporting framework, then I'm required to issue a modified opinion. Now, modified opinion can be qualified and adverse both based on the given scenario, the amount, the nature, and everything, considering everything. So, as I said, because of these two reasons, I will be issuing a modified opinion. I hope it's clear. Any doubt? Any doubt? Okay, let's proceed further. Second question. In view of current scenario, which of the following requirement of SA 610 are required to be fulfilled by statutory auditors of company prior using the direct assistance of internal audit team? Now again, the question talks about here internal audit team. We saw there were 2-3 paragraphs on internal audit. One was this one, using the work of internal audit, and one was this one. So first one was whether to use the work of internal audit to gather sufficient and appropriate audit evidence for the purpose of expressing opinion on financial statement. So that is a generic paragraph. Second, the internal audit function directly reports to the management. They do not have direct communication with those charged with governance. That is one important point in the paragraph. Also, all findings of internal audit function are reported to management, and then management decide what to report to those charged with governance. So by this I can say yes, there is some information given on the internal audit. Now let us see our options. Here the company want to use direct assistance of the internal audit. So the statutory auditor should obtain a written agreement from the management of the company that the internal audit team will be allowed to follow statutory auditor's instruction. The statutory auditor should obtain a written agreement from internal audit team that his team will keep the matters confidential. Both A and B. The statutory auditors can use direct assistance of the internal audit team after discussing the same with the management. No prior written agreement is required. So here these are the options. Here these are the options, like A, B, C, D. Which one you will choose then? Which one you will choose? Come on, guys. Which option you will choose? Like the company statutory auditor want to use direct assistance of the internal audit team. Now, prior using the direct assistant, they like what option they should choose, like which are the requirement they need to fulfill, okay, before taking the direct assistant. Come on, guys, which option to choose? See, answer is one of the four options that is there. But what is the answer that we need to choose? Come on, guys. Okay, let us see the answer. Now, in the question, what is asked? Like, which of the following requirements as per SA 610 are required to be fulfilled by statutory auditors of the company prior using the direct assistance of the internal audit team? Now, most of you might be thinking about, the fact that the reporting internal audit team is reporting to the management and they are not reporting to the those with governance. Plus, their observations are first, okay, being disclosed to the management, like based on this particular data over here, okay, this one. And first it is being reported to the management and then management decide to report what to report to the those charged with governance. Now, this is a critical case where I could say the the internal audit functions organizational status does not support the objectivity of the internal audit. Okay, this is a case where I can say the functions organizational status does not support the objectivity of the internal audit. Classic case of that. But having said that, that particular requirement to check whether the organizational status, relevant policies, procedures do adequately support the internal audit function or not is relevant when I'm using the work of internal audit, not when I'm direct taking the use of, taking a help from internal audit with respect to the direct assistance. If I want to rely upon the work performed by the internal audit team, then I need to think of those procedures and those areas. But if I'm deciding to take the direct assistance from the internal audit team, okay, it is the direct assistance that I am taking. And before taking such direct assistance, I need to, understand what are the requirements I need to fulfill. I can, give small work to the internal audit team where, there is no much objectivity is required, no much, significant risk is there. It's just a direct work. I can give that work in the form of direct assistance. I can give low risk areas. I can give a lot of things. But for that, what I need to do, I need to obtain a written agreement from authorized representative of the entity that the internal auditor will be allowed to follow the external auditor's instruction, that the entity will not intervene in the work of the internal auditor. Second, I will obtain written agreement from the internal auditors that they will keep the information confidential, or whatever the details they will get confidential as instructed by the external auditors, and they will inform a external auditor about any threat to their objectivity if that is identified later on by them. If that is the case, then yes, I can still use internal audit team, okay, for direct assistance. Again, when I want to use the work of internal audit, like they have performed the testing, I want to rely upon their work. Yes, this point is important, that they don't have the objectivity. I cannot rely upon their work. Fine. But where I want to use internal audit as a direct assistance, I can give such areas where there is a low risk, where there is, no complex calculations or accounting is involved. I can give those areas where internal audit was not involved, or they have not issued a report priorly, or they have not, issued anything with respect to this particular area. They have not worked like any project or anything on that particular area. If that is the case, then I can give work to the internal audit on that particular area, which is low risk, not much complex, low professional judgment. Okay. And then I will take these two written agreements, one from the concerned person of the entity or the management, that internal audit team will be allowed to follow statutory auditor's instruction. Number two, statutory auditor is like, internal audit team has to give confidentiality, agreement. They need to obtain, statutory auditor needs to obtain written agreement from internal audit that you will keep all the matters confidential. If these two conditions are getting satisfied, then yes, I can use internal audit team for direct assistance. Now, in the current case, it's again the application of the provision. So, option 1 is one of the part of the written agreement. Option 2 is the second part. A and B both is the correct one, because I need A and B both. I need to take both the agreements. Not only A, not only B, but both. So the correct option will be C, that A and B both. Now, no prior written agreement is required, which is wrong. Reason, because I need to have prior agreement as per the standard itself. So that is wrong. Clear? Any doubt with respect to this question? Any doubt? So always read what is asked in the question. It may be related to the paragraph given above, it may not be related to. Not necessarily it will be related. See, direct, it is here it is, being discussed about the direct assistance. And when we go to the paragraph mentioned above, it is about the objectivity of internal audit, which is relevant when using the work of internal audit. Like, when we are relying upon the work performed by the internal audit function. So both are different. I hope I'm clear. Any doubt, guys? Any doubt? That's why I always will recommend, don't directly jump to any conclusion, to anything before you read the question thoroughly. Please focus on each and every word of the question. That is very, very important. Okay. If no doubts, let's proceed further. Next question. Considering the inherent limitation with respect to the inventory count, the audit team decided not to perform any other procedures or not to obtain any documentary evidence from management with respect to the inventory. Guide the audit team in the current scenario by selecting an appropriate option from below. Again, considering the inherent limitation with respect to the inventory count, the audit team decided not to perform any other procedure or not to obtain any documentary evidence from management with respect to inventory. Now, what was the scenario with inventory? The scenario with the inventory was that over here, yeah, management allowed auditor to attend physical inventory count, however, did not allow to perform any other procedures. Why? Because management explained that the inventory consists of very unstable chemicals and inflammable gases, requires handling with skill and care. Okay, this could result if carelessness is in handling the inventory can result in catastrophe. And due to safety standard and policies, the management cannot allow auditor to perform additional audit procedures. Okay, so that was the scenario. Plus, we had over here to perform test counts on sample basis for inventory balance, which was material. Audit team will inquire with the management to provide copies of management completed physical inventory count, which will assist them in performing subsequent procedures required to determine whether inventory records actually accurately reflect the inventory actual inventory count results. Okay, so these are certain information which is given. Now, here what is asked, kindly guide the audit team in current scenario by selecting the appropriate option from below with respect to the inherent limitation to the inventory count, and as they did not decide to perform any procedures or not to obtain any documentary evidence. Now let's see what are the options. If the auditor has not obtained sufficient and appropriate audit evidence as to material financial statement assertion, the auditor shall not obtain further audit evidence. If the auditor has not obtained sufficient and appropriate audit evidence as to the material financial statement assertion, the auditor shall attempt to obtain further audit evidence. If the auditor is unable to obtain sufficient appropriate audit evidence, the auditor shall express a qualified or disclaimer of opinion. In case where the audit team is not able to obtain sufficient and appropriate audit evidence as to a material financial statement assertion, then the auditor should appoint management expert and should try to obtain relevant required evidence from such expert. In case where the audit team is not able to obtain sufficient and appropriate audit evidence as to material financial statement assertion, then the auditor should communicate to the management and shall obtain written representation from them. So, if you see the options, it is talking about if the management is, if the auditor is not able to obtain the sufficient and appropriate audit evidence due to inherent limitation, then what auditor should do? You need to select one option and then explain me like why you selected that particular option. So select any one option from these. Which one would you select in answer? Come on, guys. What will be the appropriate option that you will choose? Absolutely correct, Janvi, Sumit, Namrata. Very good. So when you want to answer a particular question, again, there is an inherent limitation, and you need to either follow the procedure of eliminating the options, or if you know the provision, you can directly find the correct answer. In the current case, let's say for example, option A, if auditor has not obtained appropriate audit evidence, then he shall perform additional procedures rather than not attending to further audit evidence. So this is contradictory in its sense, like not obtain sufficient appropriate audit evidence and shall not obtain further audit evidence. That is wrong. How will you give comfort? How will you express opinion? That's why A is incorrect. We know B is correct. Let's wait. Let's go to the C option, where audit team is not able to obtain appropriate audit evidence. Okay, then auditor should appoint management expert. So not able to take appropriate audit evidence. How can I appoint management expert? I can appoint auditor's expert. Appointing management expert, they will work for management. They will give audit evidence or help management with respect to that. So in that case, again, this is the wrong option. D. If I am not able to obtain sufficient and appropriate audit evidence, I should obtain written representation. That is the last option. Last. Again, written representation is not an evidence. Trust me, I'll not take written representation as an evidence. So again, this is also incorrect. The correct option will be option B, that okay, auditor needs to obtain other audit evidence by performing other procedures. He shall try to perform other procedures. If he is not able to perform, if he is not able to gather sufficient and appropriate audit evidence, the auditor shall express a qualified and or disclaimer of opinion. So modified opinion, basically. So B is the correct option. Okay, let us see the next question, number 19. Based on the recalculation performed by the audit team, the payroll cost arrived for the period was 30,75,000. Analyze this and guide the audit team with respect to the result obtained from the substantive analytical procedures by selecting the appropriate option from below. So they have came to a conclusion that the recalculation of payroll cost of 30,75,000. If you see above in the information, so the payroll cost book was 30 lakhs. They identified that the payout per employee was 20,500 plus there were total 150 employees. So if there are total 150 employees with average of 20,500 per employee, it comes to 30,75,000. That is given that they have came to a recalculation, plus an independent expectation developed for the payroll cost was between 30 to 32 lakh. Now coming back to the options over here. So I can say, at least by seeing the question, I can say this appears to be within the range. The range of this one. Independent expectation developed for the payroll cost, which is 30 to 32 lakh. So at least I know this is within range of independent expectation developed for the payroll cost. Fine. Now what are the options? Options are the difference identified between the payroll cost derived through substantive analytical procedures and the expectation developed is material based on the materiality fixed by the audit team and hence it requires further investigation. The amount derived through substantive analytical procedure is not in congruence with the total amount of payroll cost booked for the period. Hence, the audit team should investigate the reason for the difference between the amount derived and the actual cost booked. The payroll cost arrived is well within the expectation developed and the difference between the amount recorded and the amount derived through substantive analytical procedure is not material. Hence, it does not require any further investigation. The difference between the amount derived through substantive analytical procedures and the amount developed as an expectation is significant, and the audit team should obtain appropriate written representation from management with respect to the completeness and accuracy of the amount derived through substantive analytical procedures. Now, which option you will select? Which option you will select over here? Come on, guys. Come on, guys. Which option you will select? Okay, good Sumit, good Janvi. Come on, guys, which option you will select and what is the reason why? Good, Namrata. But what is the reason why you will select option number C? Let's say, for example, you have saved option number C, Janvi, Sumit, Namrata. Why option C? Why not option number B or D? Why C? Come on, guys. Why option C? That is very important to understand. Correct, Janvi. Very good. Because it is well within the range itself. I told you, like when we discussed earlier, it was within the range of independent expectation. If that is within the range of independent expectation, then in that case, why I would, why I would say that it's not within the range and it requires a further investigation, plus the difference between the amount or the actual cost booked and the expectation developed, and you can say the payroll cost calculated is below materiality, the difference between both. For example, I have came across of an recalculation of 30 lakh 75,000. Actual cost book was 30 lakh. So the difference is only of 75,000 plus my materiality is 10 lakh rupees. So the materiality is 10 lakh rupees. So 75,000 is way below my materiality. Even it is not material. So wherever it is said in the question that it is material, like on the basis of materiality, on the basis of materiality, okay, then in that case, it is not a correct answer. So A, B, and D are not the correct answer on that ground. My correct answer will be C, that the total payroll cost is well within the expectation developed, and there is no further requirement of any investigation of the difference. Clear? Any doubt with respect to this? Any doubt? Okay. Let's move to the next question. Based on the above outcome of the direct expenses testing, the audit team decided to project the total misstatement on the entire balance considering the testing. As per the calculation performed, the projected misstatement was 168,889. Kindly analyze and guide the audit team with respect to the results obtained from the substantive testing by selecting the appropriate option. Now, the audit team, projected the misstatement and they came up with this particular 168,889 as a projected misstatement. Now, do you think this is correct? This projected misstatement is correct? What should be the appropriate projected misstatement here? If this is not correct, if this is correct, then let's yes. If like then there is no issue. What do you think with respect to this projected misstatement? What do you think with respect to this projected misstatement? They have projected the misstatement, like and came up with the answer of 168,889. Do you think this is correct? Do you think this is correct? Come on, guys. Do you think this misstatement, projected misstatement, is correct, or what should be the appropriate projected misstatement? Come on, guys. What do you think? Okay, how usually the misstatement should be projected? In the current case, you have various expenses. How will you project your misstatement? So I have a freight expense, loading charges, shipping charges, packing expense, storing expense. I have that expenses. The total misstatement which was identified 36 lakh rupees. So 36 lakhs in front of total sample value and the balance of 38 lakh rupees. So the projected misstatement came to 1,68,889. Do you think this is the correct projected misstatement? Reason because whether this has been extrapolated in front of the total balance of expenses. Do you think this is correct? I have used the total sample value. I use the bank balance as per the books of the total expense. Do you think this is the correct way of projecting misstatement? Come on, guys, quickly. Do you think this is the correct way to project the misstatement, or I should consider some other way to project the misstatement, some other scenario? Okay, so mate, if that is wrong, then what should be the correct way? If this is wrong, then what should be the correct way? If this is wrong, then what should be the correct way? Okay, let us see. So here, let's say for example, in the current case. Now, if I want to project a misstatement, I should not be projecting directly. First of all, they have taken the total of here, like they have taken total of everything, and then they have projected this particular misstatement in front of the whole population by using the sample value. If you see this formula, 36,000 divided by 810 into 38 lakhs. But that is correct. We need to do that individually, line by line. That should be done line by line, individually, where the misstatement is there. If there is no misstatement in certain areas, why to project in front of that balance? That is not appropriate. So for example, if I have a misstatement of 25,000 in front of, okay, 5 lakh of rupees, and the total sample value is 1 lakh, I need to individually project the misstatement. Same way with storing expense, same way with packing expense. Instead of populating or projecting the misstatement at the total level, I need to project the misstatement at each individual strata level because my testing is that level. Usually at testing level, I need to project the misstatement, not at the total level. Remember that. Whenever I am doing a testing, let's say for example, I have taken a population in total, I need to project the misstatement for that particular population. So if freight expense population is different, loading charges population is different, shipping, packing, storing expense population is different. In that case, I need to project misstatement separately different for each and every population, rather than projecting a total level, which is incorrect. Now, based on our question, if you see our question, these are the options which are given. The projected misstatement calculated is appropriate. Moreover, based on the performance materiality, the projected misstatement, the auditor should modify his opinion. Again, now option A is incorrect because it says that projected misstatement is calculated appropriately, which is incorrect. So I'll say option A is incorrect. Option B, when a class of transactions or account balance has been divided into strata, then the misstatement is required to be projected for each stratum separately. That is what I was talking about. And hence the audit team approach is incorrect and with respect to the calculation of projected misstatement. Hence the audit team should recalculate the projected misstatement and then they should consider the impact on overall audit opinion based on the materiality. That is the correct option. But let's see the rest of the options also. Like, before jumping to a conclusion, let's see the rest of the options. The audit team should have considered exception of 8,000 twice while calculating the projected misstatement, as the error is regarding wrong classification and the same will affect two class of transactions or balances. Hence, the audit team should consider revising the projected misstatement and then they should consider the impact on overall audit opinion. Now see, if you identify a misstatement in a particular testing, you are required to cover that misstatement in that particular testing only. Number one. Number two, again, at overall level, the projection is incorrect. So the option number C will be incorrect because it's talking about only 8,000, which is also incorrect. So that is not a correct option. Option D, audit team has appropriately calculated the projected misstatement. At the first sentence, I'll say this is not a correct option because they are not calculated appropriately. But still, let's read. However, before modifying the audit opinion, the audit team should obtain written representation with respect to the completeness and accuracy of direct expense balance, which could serve as a sufficient and appropriate audit evidence. So, as I said, option D is incorrect because they have not calculated the projected misstatement appropriately. So, the correct option will be option B. Clear? Any doubt with respect to this question? Okay. If no doubts, then let me take up some doubts which are related to other topic which have came in the questions. One, how fraud related to the inventory can be identified? What are the procedures and audit procedures for the same from the forensic audit technique point of view and the general audit technique? See, when I talk about inventory fraud, okay, inventory fraud is something like it's depend upon the type of inventory fraud. If I say it's not a generic steps and generic details are available, but yes, there are certain red flags for which you can look for. For example, no segregation of duty. For example, there are the controls around the inventory business process are not appropriate. Okay, then you can check, there is any aged, non-moving, slow-moving items. You need to check. Okay, is there any over inventory balances, something like that, age inventories. Okay, by performing these certain procedures, you can identify a red flag in the inventory. Okay, you can identify, let's say for example, scrap. Now, most of the time when there's an inventory fraud, the team try to, or the person who is involved in the fraud, try to conceal the fraud or try to hide the fraud through scrapping. Okay, he will show that, okay, inventory got damaged and that is required to be scrapped. Or he'll try to write off the inventory from the books of account so that he can, take the inventory, like a misappropriation of assets. Now, if that is the case, that is a fraud related to the misappropriation of assets. In that case, you need to look for certain areas, like, as I told you, reserves or provisions booked for write-off, scrapping of inventory, inventory provisions, slow moving, non-moving inventories, damaged inventories, or certain kind of inventories which has been written off from the books of account. if he has tried to hide. If it is related to financial statement fraud, let's say, for example, related to the inventory valuation, okay, disclosures in the financial statement, inventory lying with the third party, how that is required to be disclosed, okay, or physical existence of the inventory. In that case, there are different kind of audit procedures which are required to be followed, even with the forensic investigations, fraud investigation in forensic accounting. I hope I have answered your question appropriately. Okay. Now, the second question, which is there with respect to the consolidated financial statement, when the component auditors audit report on the financial statement under a accounting framework different than the parent, and when the component auditors audit report under an auditing framework different than the parent. So what is the doubt here? Could you please explain the doubt, like what you want to understand when the accounting framework is different and when the auditing framework is different? So can you just provide some bit more detail on this particular question so that I can take appropriately? Okay. Meanwhile, I'll take the next question which is available. This is related to the reporting of material uncertainty regarding under SF 570 going concern paragraph. Okay. See, when I'm expressing an opinion, which was, with respect to the material uncertainty. Now, if I identify any such event where, there is an material uncertainty, at that particular point in time, management need to disclose that material uncertainty. If management is not disclosing that material uncertainty, in that case, it is a, management is not following appropriate applicable financial reporting framework. If management is not following applicable financial reporting framework, in that case, it is, non-compliance. The management should follow, and accordingly, I need to issue and modified opinion. Okay, because management has not complied with the appropriate financial reporting framework. Second, SF 570 also talks about certain scenarios where we are talking like where if management has not disclosed appropriately, in that case auditor needs to issue a modified opinion, and in the basis of modification of opinion, he needs to provide the detail why there is a modification with respect to the material uncertainty. So that is dual side. One with respect to the applicable financial reporting framework. Second is on the side of the SFI. Any doubt? Any further doubts? Okay. So there is one more doubt with respect to what procedures is required to be followed with respect to different accounting framework and say in case of consolidated financial statement, and what procedures are required to be followed in case of different auditing framework. Okay, in case of consolidated financial statement. See, when I talk about different accounting framework with respect to the consolidated financial statement, okay, then in that case, what is the scenario is that I need to pass current year's adjustment. See, when we come to the consolidated financial statement, I can harmonize, the term is a harmonization of the differences. Okay, I can harmonize the difference between the parent and the subsidiary by passing the current year adjustment to the extent, the financial statement policies or accounting policies of the subsidiary is different than the parent. So I can do that by harmonization or by passing the current year adjustment to that extent. Okay. So if let's say, for example, there is a different policy of depreciation followed by both of the companies. Okay. Then in that case, I can pass adjustment and align this financial statement with the parent. And let's say, for example, if you can say there is a different requirement of local accounting standards. Okay. If there is a different financial reporting policies there, something like that. So to that extent, I can harmonize the financial statement according to the parent. That is there. Number one. Number two, with respect to the audit. Now, when I talk about audit, it comes to the SA 600. Now, when I am going to use the work of another auditor, okay, as a principal auditor, using the work of another auditor as a principal auditor, I need to issue instructions to the parent subsidiary auditor, okay, or to the component auditor with respect to what is the materiality and what I am expecting. Number two, I should consider when I'm, going to rely upon the work of the component auditor, I need to see whether the, whatever auditing framework is there, standards on auditing or whatever the framework is present at his place or at his site is appropriate for my use, whether that gives me that much, you can say, require quality or whether that is sufficient enough for me to rely upon the work of that component auditor. Okay. So I need to consider that all the requirements which are there with respect to the component auditor, and then only I can decide whether I can rely upon the work of such auditor or not. So if that is the case, if let's say, for example, if I'm not able to rely upon the work of the component auditor because the auditing framework is different than the auditing framework I require, in that case, I need to advise the component auditor to perform the work in such a way that I can, rely upon the work of component auditor. I will provide him the guidance. I will provide him the required materials. I will provide him or, take confirmation that he needs to comply with these standards because, or let's say I will give him the essay and I'll say, okay, when you are performing the work, please comply with the essays along with your local requirement, so that I can use or rely upon the work performed by the component auditor. So that is the scene or scenario you could say that, with respect to the accounting side and auditing side both. I hope I have answered your doubt. Any further question on this? Audit procedures to be performed while consolidated financial statement, like as I told you, these are the audit procedures that they need to understand. Harmonization of the financial statement plus giving or understanding the details of the the audit framework present at the component auditor. If that is not appropriate, I'll share my audit framework. I'll ask them to comply with these guidelines and then give me the work that I require. See, now with respect to the disclosure, if I'm not able to rely upon the work after seeing the auditing framework, okay, let's say for example, the auditing framework that the component auditor is using is not appropriate, is not as per the standards that I follow. In that case, I cannot rely upon the work performed by the component auditor, and there is no requirement to report them. So I need to, gather the sufficient and appropriate audit evidence to that component, to that extent of that component. If I'm not able to get the sufficient and appropriate audit evidence, then it's in my issue that I cannot issue an opinion in that case. But I cannot say that, okay, he has a different standard, he has a different auditing framework, and then, okay, fine, that's why I cannot rely. No, I cannot report in that way. If I conclude that, okay, being a different auditing framework, I can still rely. If I conclude being a different auditing framework, I can still rely upon the work performed by the component auditor. Then there is no point of disclosure. Then it will be like, these are the audit performed by the component auditor, not by us. Management has provided the report to us and we have relied upon the work of the component auditor. That will be the then scenario. The normal reporting which is done with respect to all the components, where we rely upon the work of performed by another auditor. Any doubts with respect to this? Namrata, can you explain your query more with respect to your insurance one? Any doubt, guys? Any doubt? Okay. There is one. So there is one question on the reinsurance. Okay. Now, verification of reinsurance inward. So how to verify, how to audit the reinsurance inward? First of all, reinsurance inward is basically, they are regulated with respect to the IRDAI, General Insurance Regulations, General Insurance Reinsurance Regulations. So there's the reinsurance regulations which have been prescribed, and we need to, first see what is the compliance requirement with respect to those regulations. Okay. Now, when I talk about reinsurance inward, that is a reinsurance coming to us basically. Now, like what reinsurance we have accepted. So, with respect to the verification, I should understand what are the norms and guidelines prescribed by the Insurance Act with respect to the reinsurance, plus IRDA regulations with respect to the reinsurance, whether the reinsurance agreements and acceptance are in India and with respect to the foreign are done as per the prescribed parameters of the regulations or with the act or not. Number two, I need to check that the domestic inward acceptance are in accordance with the approved program of the reinsurance. Then I need to check whether, okay, the reinsurance inward acceptance, both India and foreign one, are as per the agreement or agreement entered with the Indian and foreign insurance companies So we usually enter into an agreement with respect to the reinsurance. Okay. And then on the basis of that, we decide, okay, this will be the reinsurance that I will be accepting. So I need to understand whether those reinsurance that I have accepted are based on the accepted agreement, signed agreement or not. So even if you see there are limits which are prescribed basically in the regulations, I need to adhere to those limits also. Okay. Now, when I talk about inward reinsurance business, the regulation says that every Indian insurer or reinsurer basically, or foreign reinsurer having branch, okay, want to write inward reinsurance business, they are required to have a well-defined underwriting policy approved by the board of directors for underwriting inward reinsurance. This is the first requirement they need to follow. Second, they are required to file with the authority at least 45 days before the commencement of each financial year. Okay, it's underwriting, it's inward reinsurance underwriting policy, stating the classes of the business or insurance segment, geographical scope, and all such details. Third, they are required to ensure that the decision on acceptance of inward reinsurance business are made by the person with necessary knowledge and experience. So the person who is making decisions should have necessary knowledge and experience. And fourth, they are required to file with respect to the changes any in the underwriting policy. So that is a requirement that they need to comply, and we need to as an auditor ensure that these requirements are being complied appropriately. With respect to the reinsurance, further there are more, from time to time there are some circulars and there are some other regulations which are there, and these regulations are also required to be complied with respect to the reinsurance. Then with respect to more reinsurance, we need to, auditor needs to examine whether proper system. Now, let's say that was the regulation side, that was the compliance side. Now we need to come within the entity itself, whether there is a proper system or control over the quantum of agreement at any point in time, existing at any point in time. Okay, and the periodical accounting statement have been received in connection with the agreements or not, whether proper premium and claims have been recorded or not. Okay, so there are a lot many things we need to look into when we are doing a verification of reinsurance. If you want further detail, I would request refer page 10.57 of the study material, where in detail the verification of reinsurance invoice has been has been specified in detail. Same way with the reinsurance outward. So when I talk about reinsurance outward, again, my foreign exchange regulations are there, my IRDA regulations are there, and accordingly, based on these regulations, I need to see whether the reinsurance is appropriate, whether the reinsurance inward or outward is appropriate or not. I hope I am clear. Any doubt? Any doubt, guys? No? If no further doubt, let's take a quick 10-minute break, and after the break, we'll gather back and we'll continue the session. Okay? Let's take a quick 10-minute break. Hello everyone, welcome back to the session. Okay, let's continue forward. And before I continue forward, there are few more queries. Let me take it through. So one is what in dealing room operations in case of bank. Dealing room operations generally, is a centralized area or establishment in a particular bank, usually in a commercial bank, which offers two-way dealing price for currencies and assets. So it's a, you can say, a kind of a center for market and risk management activities. Okay, it is a clearing house for risk for the bank, where treasury risk, other type of risk are being considered. Also, in a case of a like basically in dealing room, uh, like they think about the risk. What is the risk with respect to the buy sell of a currency? Okay, other risks which are there with respect to the currency or other class of asset class instruments. So in dealing room, basically it's a kind of risk management area for the bank. So there are various sub functions of the dealing room, and that's topic for another day of discussion because it contains a lot of things. It's on the process side of the bank. Any other doubt, guys? Any other doubt? So we saw till now the questions and how to solve the MCQ again. If they are the if they are the logic based, if they are the provision based, then you need to apply the provision. But this way you can use to identify the incorrect options and you can eliminate the incorrect options. Any doubt, guys? No? Let's take one more integrated case scenario. So for your further understanding, and then we can, see. Okay. So CA Kamlesh Datta was appointed as the engagement partner on behalf of Datta and Associate for conducting the statutory audit for third consecutive year of Pramath Limited, an unlisted public company with a turnover of 35 CR during FY 1920. From FY 2021 onwards, Pramath Limited has voluntarily adopted to prepare its financial statement as per Division 2, Schedule 3 of the Companies Act 2023, due to which Tata and Associate has revised the terms of auditing engagement for the current year audit, current audit engagement. As per the revised terms, it was decided that the audit report on the financial statement will incorporate a paragraph in accordance with SA 706, drawing user attention to the additional disclosures. Moreover, it was decided that the management will also include a present appropriate disclosure in the financial statement with respect to this change. Okay. Then, while auditing the entity, CA Kamlesh came across a business policy of Pramath Limited that required to invest some portion of its money earned in its business in securities of different blue chip companies. And due to this reason, almost 55% of Pramath Limited's total asset consists of such investment. These securities transactions were handled by its broker company, River Securities Private Limited. River Securities was also performing necessary investment account reconciliations and also preparing the MTM gain and loss calculation for the entity. Pramath Limited used to rely upon the calculation performed by the River Securities Private Limited, and based on that, they pass the MTM entry for their current investment every month. Pramath Limited were relying on the controls present in SPL for the preparation of this entry. They also listed controls present in SPL in their risk control metrics as the key controls. The engagement quality control reviewer, CA Tushar, recommended CA Kamlesh to obtain type 2 report from the management of RSPL, to which CA Kamlesh said that this was not required to do so as the management was already comfortable with the controls present in RSPL. Now, further, while conducting the audit, CA Kamlesh ordered that the investment are in certain securities was sold at a price less than at which they were acquired and didn't report the matter in Section 143(1) of the Companies Act 2013 without even considering to inquire with the proprietary aspect of the same. CA Kamlesh made the following observation while examining the financial statement prepared by the company as per Division 2, Schedule 3 of the Companies Act for the first time. Other non-operating income and expense related to it were shown separately in the statement of profit and loss account. Trade payables payable after 12 months and deferred tax liabilities were shown directly under the head of non-current liabilities. While finalizing the audit report, CA Kamlesh prepared a letter containing key important points to be communicated to those charged with governance and audit committee of the entity. The letter was prepared in addition to the audit report. The audit team was of the view that the above mentioned letter, the audit team is required to generate UDIN for that particular letter. Okay, so now these are certain points which are discussed in the case scenario. Basically, if I have to summarize, what are the points which are there? So, adoption of Division 2. For the first time. Then there is a disclosure in other matter para. This is outsourcing. Okay. And service entity related things. So type 2 report, service entity. Now this is reporting as per company set. Again, this is some additional reporting observations which have been identified. So this is again related to my Schedule 3. This is communication with those charged with governance and UDIN thereon, plus communication with those charged with governance. Now let's understand the questions. While finalizing the audit report, CA Kamlesh decided to present the early adoption of Ind AS under the other matter paragraph, as in the auditor's judgment, it is relevant to the user's understanding of the audit. The auditor's responsibility of the audit report kindly guides Kamlesh with respect to the correct reporting as per SA 706. Now these are the options A, B, C, D. Now you tell me the early adoption of the Ind AS will be reported in other matter paragraph or is required to be reported somewhere else, where you will report the other this early adoption of Ind AS. Where will you report the early adoption of Ind AS? In your audit report, if you want to report early adoption of Ind AS by the management, where will you report? Come on, guys. Where will you report this early adoption of Ind AS? And I want with reason why. So with the area which you are referring, why there again, why Jamli with respect to your answer. I just don't only want answer, I want reason with the answer. Because if you are aware with the reason, then only you can easily skim through the options and select the appropriate option easily. Okay. Good, Janvi. Good, Sumit. But I want reasons. Okay. Good, Sumit. Come on, guys. Where will you report early adoption of Ind AS in your audit report if you want to, enumerate the matter in your audit report? Come on, guys. Think like, okay, if this is an area, if the management has adopted early some, different financial reporting framework, where it should come into the picture in my audit report. Good. Good, Namrata. So you need to think from the, what is the impact of early adoption on where it will impact. And accordingly, you can, decide the answer here. Okay. Correct. Good. Good, Namrata. So basically, see, if I want to answer this question, first of all, I need to understand. Let's go to the options and then we'll understand how to answer. What is the appropriate option? So option number 1: no disclosure is required as voluntary adoption of Division 2, Schedule 3 of the Companies Act. Okay, it's a voluntary adoption. That is correct. No disclosure could be an answer, but I am not sure as of now. The audit team should report the change in the emphasis of matter paragraphs because in the auditor's judgment, it is of such importance that is fundamental to the user understanding of the financial statement. Yes, this could be the scenario, but having said that, I need to make sure if I'm including in the EOM paragraph, then there should be appropriate reporting in the financial statement so that I can bring the attention of the users on such important issue. Option number C: the audit team should report the change in the other matter paragraph because in auditor's judgment, it is of such importance that it's fundamental to the user understanding of the financial statement. Could be an answer. The audit team should qualify as per SA 705 the state change as it was not required to be implemented and this will create unnecessary confusion for the reader. That is not appropriate basically because there was no bar on the early adoption. So I could say B is incorrect as of now. Now A, B and C. Number 1, when I'm talking about EOM paragraph, I need to have a corresponding reporting in the financial statement, corresponding disclosure in the financial statement. And when I'm talking about the other matter paragraph, it is related to the auditor's understanding and auditor's responsibility. If you see in the question itself, Okay, if you see in the question itself, when I talk about other matter paragraph is necessary to understand the auditor's responsibility and or audit report. But in the option, it is said that it is such important that is fundamental to the user understanding of the financial statement. No, other information is not for the other matter paragraph is not for the financial statement, but for the auditor's responsibility or audit report. Hence, I can say option C is incorrect. Now comes to the option B and A. I could say B is also good because it appears to be correct. I'm not sure about the A. Again, no disclosure is required as it's a voluntary adoption. For that, let's go to the question. Now, if you see the question itself, there is one line mentioned that it was decided that the auditor's report on the financial statement will incorporate a paragraph in accordance with SA 706, drawing user attention to the additional disclosures. Plus, it was decided that the management will also present appropriate disclosure in the financial statement. With respect to this change, means they have to disclose as per SA 706. Plus, management is also disclosing in the financial statement. Then why I will select the option for the no disclosure? If they are discussing to disclose, then the correct option will be an option with a disclosure, not without disclosure. Again, if you see, if your requirement of the question, it says that reporting requirement in audit report as per SA 706. So SA 706 talks about emphasis of matter paragraph, other matter paragraph, not anything else. No disclosure is not covered in the SA 706, and hence the correct option will be B. And by default also it will be B because it's an emphasis of matter. If there is an early adoption of any different financial reporting framework, it is not related to audit. It is related to the preparation and presentation of financial statement. Management is giving disclosure. I will reiterate the same, that it is fundamental to the user understanding of the financial statement that this time they have adopted in the AS. So the correct option will be B. Any doubt with respect to this? Any doubt? Okay. Now, let's see a next question. The next question is, just a minute. Yeah. CA Kamlesh, risk assessment include an expectation that the control at the service organization are operating effectively, and he contended that there was no requirement to obtain type 2 report. Kindly guide CA Kamlesh with respect to the requirement of SA 402. So, what is the requirement with respect to when we talk about, let's say, for example, considering audit consideration relating to the entity using a service organization. So when I'm considering the requirements of SA 402 or service organization, what is the appropriate way, or I could say what is the requirement of type 2 report when I'm required to take type 2 report? At what point in time I can say, okay, the type 2 report is necessary for me? Come on, guys. So what are the things that I need to consider? Okay, or what are the requirements I need to consider if I want to, obtain a type 2 report, or You can say, like in the current scenario, CA Kamlesh risk assessment includes an expectation that control at the service organization are operating effectively. So, with respect to this, if I have an expectation that the controls at the service organization are operating effectively, then at that point in time, is there any requirement as per SA 402? What is the correct option over here? Good, Sumit. Good, Janvi. So if that is the case, risk assessment includes an expectation that the control at the service organization are operating effectively. Then what is the requirement here? What should I do? What audit procedures I need to follow in order to, or in alignment with these expectations? Come on, guys. Let's say, for example, in the current scenario only, I say I don't want a type 2 report. Is it fine? Not obtaining a type 2 report is fine or not? Not obtaining a type 2 report is fine or not? Come on, guys, quickly. Let's say I don't want to obtain type 2 report. If I don't want to obtain a type 2 report, is it fine for me? Is there any alternative to the type 2 report? Is there any alternative to the type 2 report? Is there any alternative to the type 2 report? Okay, let's think of, let's go to the type 2 report a bit in detail. Who prepares type 2 report? If I want, let's say, for example, if we are saying that, okay, no, type 2 report is compulsory. Who prepares type 2 report? Who is the preparer of type 2 report? Someone might be preparing a type 2 report. Who prepares the type 2 report? If I want to rely, if I want to take a type 2 report, I should be aware that, okay, who should prepare a type 2 report, and from there, that person, I can obtain a type 2 report. So who is that person, responsible person for preparing this kind of report? So there are two companies in the picture here. One company is the Pramath Limited, and some processes of the Pramath Limited were outsourced to the River Securities Private Limited, RSPL. So who's from whom I can take a type 2 report? So Pramath Limited is there one. It's auditor CA Kamlesh. So CA Kamlesh Datta was appointed on behalf of Datta and Associates. So he's the auditor. Okay. Then we have a RSPL as a service organization. So from whom we need to take this report? CA Kamlesh is there. Pramath Limited is there. RSPL is there. Who will give me type 2 report? Okay, Sumit. Okay, Janvi. Is Pramath Limited the one who needs to prepare the type 2 report? Or is RSPL the one who needs to prepare type 2 report? Or the Kamlesh, CA Kamlesh has to prepare the type 2 report? Who has to prepare the type 2 report? And to whom they will give? Very important thing. Because we till now, we focus on, okay, type 1 report required, type 2 report required. But from whom? Who will prepare the report? Who will give to us? Are we required to take from the entity's auditor, like Pramath Limited's auditor? Or are we required to take the report from Pramath Limited? Or are we required to take the report from RSPL? Who will give me type 2 report? That is an important question. And the answer to that question lies within the content of the report. So I'll discuss the answer of the question, who needs to prepare. Okay. The answer of this particular question lies in the content of the report. So my next question to you guys is, what is enumerated, or what is there inside in type 2 report? What is enumerated in type 2 report? What are the things which are mentioned in type 2 report? If you think I need type 2 report, but why, what is mentioned in this? What golden words are in that type 2 report that I need that type 2 report? Okay, good, Janvi. So there is a type 1 report also. Why I can't take type 1 report? Why I need to take type 2 only? So I can say, okay, I need type 1 report. Why I'll go for type 1? Oh, type 2. I need type 1. That is fine for me. Why only type 2? What is so unique in the type 2 report that I can't, work with the type 1 report? Any question or like any answers on this? Very important questions. At least try. I'll suggest at least try to answer so that it will enhance your understanding about the topic. Trust me, it will enhance the understanding about the topic. Okay. Now, okay. Good, Janvi. Very good. So let me explain you why type 2, what is in the type 2, and who needs to prepare. See, when I talk about type 1 report, basically, type 1 report contains description prepared by management of the service organization systems, control, objective related to the controls, and that they have been designed and implemented at a specified date. So basically, if I say type 1 report, it talks about service organization system, control, and their design and implementation at specified date. Okay. Now this is prepared by management. So the SO details and everything, it is prepared by the management. Now then what it happens is once the description is prepared by the management, the auditor provides a reasonable assurance on that. So this report, this description plus reasonable assurance by service organization auditor on the above, that whatever it is enumerated above is correct. That is a type 1 report. So basically this is the type 1 report. Okay. Now when I come to the type 2 report, the type 2 report and type 1 report, there is a two difference. From type 1 to type 2, everything is same. So everything is same as type 1 report. So type 1 and type 2, everything is same. So what I'll do is, let's say for example, I'll say type 1 report plus the only change with respect to the type 1 and type 2 is that in type 1, I was talking about at a specified date, but in type 2, if I change that specified date for throughout the period. So a description prepared by the management of service organization system, their control objectives, their design, implementation as at a specified date or throughout a specified periods, and in some cases operative effectiveness throughout a period. So I say their design and implementation means operating effectiveness throughout a period, not on a specific date. Now, when it comes to a reasonable assurance by an auditor not only needs to provide the reasonable assurance with the description, plus he needs to provide reasonable assurance on operating effectiveness. Means they were operating throughout the period. Now that is a type 2 report. So there are two things. One, a type 1 report descriptions and throughout operating effectiveness prepared by the management of service organization, and the reasonable assurance provided by the auditor. Now then what happens is, once a reasonable assurance provided by the auditor, the service organization's auditor, service organization's auditor, in our case it will be RSPL's auditor, has to give this report, has to prepare this report and give it to user entities or user auditor. User auditor basically is nothing but CA Kamlesh. So RSPL's auditor will prepare this report and will give it to CA Kamlesh. Now the question comes is, why type 2 report only? Type 1 report, no, I don't require type 1 report, and why I require type 2 report only? Now see, when I only want an evidence with respect to, okay, these are the controls description at a particular point in time, type 1 report is sufficient. But I am relying upon the controls which are present at the service organization throughout the year. And I'm saying they are operating effectively. This is not present in type 1 report. That's why I need type 2 report by default. So if I am relying upon the controls and in my risk assessment, if there is an expectation that the control at the service organizations are operating effectively, then I need to obtain type 2 report, because operating effectively throughout the period, it's a part of type 2 report, not type 1. So I need to obtain a type 2 report in that case. Now coming to the question, is there any alternative to the type 2 report? Is there any alternative to the type 2 report? So the alternative, yes, there are alternatives to the type 2 report. So there are three things you can do. When you want to have the understanding of operative effectiveness, OE can be obtained by three ways. One is the type 2 report that we saw. Second, very common one, or you can say like simple is go and test the control at the service organization. So testing controls at service organization if they allow you. Or number 3, using another auditor to perform the test at service organization. Using another auditor to test at service organization. I can perform any of the 3 things to obtain evidence about operating effectiveness of the controls at the service organization, not necessarily the type 2 report. So type 1 report as a specified date. Type 1 report talks about things being contained in it at a specified date. Type 2 report talks about throughout the period. And when I need operating effectively, I need throughout the period, not a specified date. Clear? That's why I need a type 2 report. But alternates are available. But in the current case, I need type 2 report. And accordingly, in the current case, the answer will be B, which is yes, I need type 2 report for that. A, which says that type 2 report is not required, is wrong. C, which talks about that, it is a judgment on the recommendation of engagement quality control reviewer, also wrong. And D, which says that no services are outsourced, that is also wrong. Services are outsourced. I hope I'm clear. Let's go quickly to the next question. So next question is whether it is justifiable that the CA Kamlesh did not report on the matter with respect to the sale of investment even without inquiry for the same. We know the answer, that it's pretty simple. In the current case, there was a there was a sale of investment at a price lower than the market value. Now you need to answer whether in the current case, okay, the matter which is not reported with respect to the sale of investment, even without inquiring for the same. See, what was the detail which was given that over here? Yeah. Further, Mr. C.A. Kamlesh observed that the investment in certain securities were sold at price less than at which they were acquired, and he did not report such matter under section 143(1) of the Companies Act 2013, even without considering to inquire into the proprietary aspect of the same. Now he did not consider the proprietary aspect, and there was a sale of securities at the price less than at which they were acquired. Do you think there is a reporting requirement for this? Do you think there is a reporting requirement for this? Pretty simple. It is pretty simple and straightforward. There is no doubt in it. What do you think? See, the details are within the question itself. Do you think there is a requirement of reporting? So let's see the question here. So what would be the answer? Is there any requirement of the reporting? Whether it is justifiable that CA Kamlesh did not report the matter. So what would be the option you will choose? I would say this is a pretty straightforward. Pretty much straightforward. The things are within the question itself. Come on, guys. Do you think this is justifiable? So what option you would choose from here? You need to choose one option over here. What option you will choose? Come on, guys, quickly. You need to choose one option. You already given the answer, just you need to choose one option from this. Okay. So here, some of the answers are saying it is justifiable. Some of you are saying it is not justifiable. Okay. Now, coming to this particular question only. Now, when it is required to be reported, that is very important. Okay. When it is required to be reported, it's very important to understand from that point of view. Now, what provision 143.1 talks about? Okay. 143.1. When I go to 143.1, okay, it talks about where the company, not being an investment company or a banking company, invest whether so much of the asset of the company consists as a share, debenture and other securities have been sold at a price less than at which they were purchased by the company, then that is required. Okay, the auditor is required to inquire into the following matters, but provided that the company not being an investment company or a banking company. Okay, that is a condition which is given in the section itself. If that is the case, then in that case, they are not required to report if that's an investment company or a banking company. Okay. Now, in the current case, if you see with respect to the information which is given, 55% of the total asset of Parmat Limited will consist of such investment. CA Kamlesh came across a business policy of Parmat Limited that required to invest some portion of its money earned in the business in the securities of different blue chip companies. Okay. Now, plus there was also M2M for their current investments. So RSP, Parmat Limited used to rely upon the calculation performed by RSPL, and based on that, they passed the mark-to-market entry for their current investment every month. So they were valuing the investment, they were bringing the investment to the fair value. Substantially, all of its investment on a fair value basis. They were measuring and evaluating the performance on a fair value basis. Okay. Now, based on this information, I could say this appears to be an investment company. Based on this information, I can say this is an investment company. Measures and evaluates the performance substantially of all its investment on a fair value basis, or obtain funds, or a purpose of investment, or management services. So if that is an investment company, then the requirement will not be applicable. Are you getting my point? If this is an investment company, then the requirement will not be applicable, because this is not applicable to an investment company as per section 143(1) only. Hence, in the given scenario, if this is an investment company, then this requirement will not be applicable of 143(1). Hence, there is no reporting requirement. So the correct answer will be D. Yes, as the relevant clause for the reporting is not applicable in the Parmat Limited case. This is justifiable. Clear? Okay. Now, let's proceed to the last question. Identify the errors, if any, in the preparation of the financial statement by the company as per Division 2, Schedule 3 of the Companies Act 2013 from the observation made by CA Kamlesh. So you need to identify the errors, basically. Other non-operating income should have been shown by netting of the expense related to it And trade payables and deferred tax liabilities should be shown under the head of subheading financial liabilities under non-current liabilities. Second, trade payables and deferred tax liabilities should be shown under the head of subheadings financial liability under the head non-current liabilities. C, other non-operating income should have been shown by netting of the expense related to it, and trade payables should have been shown under the heading of financial liability under the head of non-current liabilities. And D, trade payables should have been shown under the heading financial liability under the non-current liabilities. What do you think is the correct option over here? What are the errors basically? So what is the correct option? Where it should have been shown? Come on, guys. What would be the correct option here? What are the errors in the reporting that has been done? So earlier, if I go the reporting that has been done, it is that non-operating income and expense related to were shown separately in the statement of profit and loss account, and trade payables payable after 12 months and deferred tax liabilities were shown directly under the head of non-current liabilities. So these were the two things which were done. Now, which is the correct option? What is the error here? What is the error here? Come on, guys. What is the error here? And how it should have been reported? Sohan Jani, I'll come to that question again. Don't worry on that. I'll come to that. So meanwhile, what is the correct option over here? Like how the error should be resolved? Like if there is an incorrect reporting in the financial statement, what is the correct way of reporting? What will be the correct way of reporting? So, okay, let's see. Number one, option 8. Other non-operating income should have been shown by netting of the expense related to it and the trade payables. Okay, and deferred tax liability should have been shown under the heading, subheading of financial liabilities under the non-current liabilities. See, trade payables is fine, non-operating is fine, but deferred tax direct under the head of financial liability is not correct. That's why A will not be the correct option because this should not have been there. This one. B, trade payables and deferred tax liability should be shown under financial liabilities under the head non-current. As I told you, deferred tax should not be under the head of financial liability. That's why B is also correct. C, yes, non-operating should be shown off by the netting of the expense plus trade payable should have been shown under the head of financial liabilities. That is correct. That's why I'll say, okay, C is the correct option as of now. D, trade payable should have been shown under the head of financial liabilities under the head of non-current liabilities. What about non-operating? That is missing. That's why D is also incorrect because non-operating income is missing. It should be netted off. So the correct option is C. Other non-operating income should have been netted off with the expenses plus trade payable under financial liabilities. So there is no issue with respect to the deferred tax. Clear? Okay. Now, with respect to the investment entity, see, there is a paragraph 27 which talks about the definition of the investment entity, like obtaining funds from one or more investment, okay, investors for the purpose of providing those investors with the investment management service, committing to its investment that the business purpose is to invest funds solely for the return, solely from capital appreciation, or both, like investment income and capital appreciation. And third, measures and evaluate performance on substantially all investment on fair value basis. We have seen fair value basis. Now, obtaining funds from one or more investors. Obtaining fund means here they are obtaining funds indirectly, like the funds which they are generating from their income. So those are also funds. It's not necessary that I obtain from some large group. Okay, when you read this guidance also, it says not obtaining funds from one or like large group. I can obtain from one only, one investor, or within the company itself. Okay, and if I am obtaining funds, I need to provide investment management service to them. If my own funds are there, still I'm fine. Then commits to its investor that the business purpose is to invest funds solely for returns from capital appreciation and investment income. So when I'm investing the funds, okay, invest funds solely for the returns. There is no other purpose for the investing the funds in the current case also. If you read the definition, it qualifies the definition. I'm investing the fund for sole purpose of capital appreciation and for investment income. There is no any other way for investment. Okay, there is no purpose other of investment like other than the capital appreciation, which is not mentioned over here. So in that case, I could say this is an investment company, and that's why it will not be applicable. And 55% of the total assets are consisting of such investments only. Majority of assets are investment. That's why it will be investment company. Throughout the Companies Act, there is, if you see, we draw the reference of the investment entity from the Ind AS. The definition is provided within the Ind AS itself. And when we refer to Ind AS, we need to refer to the relevant guidance, which is also provided in the Ind AS. So in there is a paragraph 28 which talks that in absence of any of these typical characteristics does not necessarily disqualify an entity from being an investment entity. So there are some guidance that we need to apply to qualify that as an investment entity. Okay. So that's it with respect to the investment entity. I'll again request you guys to read Ind AS in this regard. Okay, Ind AS 1110 consolidated financial statement. You can refer to paragraph 28 or 27 to the relevant paragraphs till 30 plus their guidance material. If you have still doubt, you can reach out to us. I will be definitely try to answer that. Today also with us we have Karuna ma'am. She will also be providing you some insights about the system and technical guidance. So hello ma'am. Ma'am, you are on mute, I think.
Good morning, students. So hope you are enjoying. Now, journey is just going to finish for CA Final Paper 3 Advanced Auditing and Professional Ethics. It's our last session. Of course, we'll be coming back to you in BOS for your success, which will be in September month. And you all are aware that little progress each day add up to big result. So we have practiced lot of questions. We have learned new concept, amendments in detail. Harshad has tried to cover all the aspects, how to go about the paper, how to manage the time, how to read the question carefully, what are the important facts given in the question, and how to jot down those points and cover in your answer. So we have practiced in last 3 days for that, right? First thing I want to tell you that start your day with positive thinking, okay? Because just one small positive thought in morning can change your whole day, right? So when you're starting your study, your first promise to yourself should be that, yes, I can do it, I will do it, nothing is difficult, and I have to put in my 100% of efforts. Fine. And when you're starting, just think, what is your target? What you are wanting to achieve? What are your plans? Because for accomplishment of any task, 3 things are very, very important. One is planning, because I will not go in technical part. Harshad has already covered in depth, in detail. So we can stop sharing that screen, okay? And will not discuss any of the question. In case you have any specific question, we'll certainly try to address that question, okay? So, dear students, I'm here to just tell you recipe for success, because auditing is not as difficult as we are thinking. No, although I know that results are not as good. So for that, our strategy should be planned properly. Okay, just like audit planning, for getting success, our strategy should be properly planned. So if you want to prepare anything, then you need to, you should be aware what are the ingredients, right? So for success also, you should be aware what are the ingredients and why it is very, very important, because it may affect the taste of the final product which will come out. Okay, so for auditing also, because auditing is interrelated with all other subjects. In auditing, you will find taste of accounting, FR, law, DT. So, and then professional ethics is also there, because we are going to become future chartered accountants. So we need to comply with our ethical part also. So code of ethics is there, which will save us, will save our profession in long term to go about. Then why peer review is required, where one peer is reviewing your work done. Quality review, why it is very important. And all these topics are covered by Harshad in detail. I have also heard his lecture. He has tried to cover with the help of as many questions as he can, right? So in that, if you have any doubt, you can get back to us. We'll be happy to assist you. Now, coming back to my point that yes, for getting success, for getting good result in audit, what we need to do? We need to start with positive thought. We need to go with little progress. Each step is very, very important for the success journey. Then very important part is what are our ingredients, because planning, then preparing, and what are our steps, what efforts we have put in for achieving our goal. That's very important, right? What you have thought in your dream you want to accomplish, and for that. Now, when we come to ingredient part, so one of the important ingredient is our live coaching, this BOS live learning class, which give you insight of all the topics, where you are able to understand the topic, you are able to revise, and not only revision, with the help of more and more questions, you are able to practice and prepare for examination, right? So one of the important ingredient is our study material, okay, which is of course bulky. But why it is bulky? Just think from that perspective, because many students who are staying in areas where internet is not there, okay, not many facilities are there, so it's distance learning course also. So we need to cater all the requirements. We need to think from the perspective of all the students, not only who are in Mumbai, Delhi, or Calcutta, where techno-savvy environment is there. So when we are preparing our study material, we need to think of all the students, where they are, what kind of facilities they are having, because many students are just preparing on the basis of our study material and on our classes basis, right? So for that purpose, the study is bulky. Now, how you can make it short? When you are studying with the help of study material, you are able to see that some of the parts are covered in flow chart. You can prepare your notes in the side. Which are the important part? You can highlight those points and write in your diary which of the papers are important, which are the topics, which are the important concepts are covered on which paper. Because when you are revising, it will be helpful for you, because at that time you need not to search where is that paper, कहाँ पढ़ा था, कैसे था, ओ कहाँ है, याद नहीं आ रहा. So if you have written in your diary, then you will refer that and you will directly reach to that page where you have prepared your notes, where you have prepared your flow charts, your own flow charts. Just like we give in our capsule, we give in our Saransh booklet, you can also, after studying, you can make your own flow chart. I generally, in the study material, whatever flow charts are being given, some of the flow charts are prepared by my own, I have prepared at my own for my understanding. When new topic comes, we also start working on that. We also prepare, we also understand. And then we prepare flowchart for our better understanding so that we can work on the same. Okay. So you can also, same way, you can also prepare your flowcharts or your notes so that in future it will be helpful for you. Fine. So one thing is you can make your own study material short, like for auditing pronouncement, because I already always tell key standards are very important, because not only weightage is too much, but also in future also it will be very important. Compliance of the standard is required from its statutory requirement also. It's required under Companies Act 2013, as well as in many perspective, many when you will be going in practice or you'll be going for job, you will find it very important, right? So standards are very important. Now you will say, ma'am, this auditing pronouncement book is so bulky, how to study it? So then you need to see that our standards are divided into bare standard and application and explanatory material. So at least read bare standard part. In examination, you will not find any difficulty while reading the question that from where it is, because some of the questions are so much confusing that it can be answered on the basis of any of the pair. Okay, you can interlink with any of the standards. So when you read carefully the standard, when you made your own flowchart regarding the standard name, objective, scope, important points covered in standard, after reading the standard, at least bare standard you have gone through, then you will be able to identify the requirement which is asked in the question, and you will be able to give prompt answer, correct answer. Because in examination, I've already told, if the question is for 4 marks and you are giving 4 points, but you have segregated 1 point to 2-3 points, or if you're writing in another way, okay, language change, then you will not get any marks for that. Fine, because the examiner is very smart. He knows which points are required in the answer for that particular question. So you cannot take them full. Okay, so for that, our study should be in-depth and we should go with full preparation. No shortcuts. Okay, ignore going for shortcuts. Don't try to study in short. Okay, then second thing is reference book. Of course, you can use, but then ensure that important points and the steps which are given in study material or in their standard are coming in same way, because you are referring some author's reference book, right? And they have made notes for you. One point is divided into 3-4 sub points. And when you're writing in examination, because you have studied with the help of that reference book only, and you will be writing in the same pattern. Now try to understand, if the question is for 4 marks, 1 point, if they're segregated in 4 points and you're writing 4 points, those 4 points only, you are attending only 1 marks question. So for 100 marks, you are attending only 25% of the paper. Then our result will be not as we are predicting. And then at the end, you will think, मैंने तो यही पढ़ा था, and I have written that only. My answer was 100% correct. Why I am not getting marks? Why my marks are so less in auditing subject? Auditing is very difficult. Not able to tackle, okay, and will lose interest in the subject and will study less also. So for that, you need to carefully read the reference book also and check whether it is in accordance with study material or pronouncement, or whether it is in compliance with SEBI, MCA, RB, at least the regulatory authorities we need to check, right? Then third point is, after going through this, after studying with the help of study material and reference book, please revise with the help of revisionary test paper. Sometimes many of the questions are as it is being asked in the examination from the revisionary test paper or mock test paper. So revisionary test paper is very, very important, where we try to cover new questions also, which are based on amendments. Okay, so please read the revisionary test paper carefully. Then mock test paper. Now you are prepared. Okay, you have referred study material, you have referred our live learning class, you have referred this RTP, you have referred your reference books, you have made your own notes. Now how you will ensure whether we are in right direction or not? Who will check? Okay, so then you need to sit in the examination condition and try to attempt with honesty for 3 hours mock test paper. In mock test paper, it is generally based on the paper pattern. Okay, 30 marks MCQ part is there, where integrated case scenario is also there, and then descriptive part. Same way, same on the basis of the examination pattern, we prepare mock test paper. Okay. Actually, I'm giving example of my son. When I tell him study hard, he said कि mama मुझे पूरा learn हो गया है. Now I am ready. I am prepared. Then I will tell him, okay, I am giving you 4 questions. You sit and write in examination condition. Then I'll come to know how much you are prepared. So same way for you, because when he is writing, sometimes he is missing some part. Sometimes he is not able to remember. Okay. So for that, it is very, very important. You check how much you are able to understand. When you will be writing, you can check with the answer whether we are covering all the important part, because sometimes when students contact us, they come with their answer sheet. And what happens if the question is asked in 2 parts, or the question is asking about 3 parts, they are touching upon only 1 part. They are not able to understand that there are 2 parts in the question, and for 4 marks, if it is divided to 2 marks, then you are attending only for 2 marks. So you will not get good marks. So for that, it is very, very important to read the question twice or thrice and understand the requirement carefully. Then you will be able to write in the examination. Okay, mock test will help you in analyzing and assessing whether you are understanding the question correctly. Second point, whether you are writing all the important parts, you are not missing anything which is very, very important, you are not attending in that question. Okay, so mock test that is the reason you are like practicing in examination condition. You will be able to manage your stress. You will learn how to manage time, because in mock test 2 series are generally conducted by BOS. So when you are practicing one series, of course, you may find difficulty, but in second series, it should be better one. Okay. So then you need to practice with the help of mock test paper. Now, Beers for Your Success is being conducted for you. Beers for Your Success, in that, I think Namrata is saying, whenever I read the chapter after 2-4 days, I'm not able to remember what should be my strategy. Yes, I will come to that. And after first reading, can we refer RTP? It will be great if you are able to understand with the help of RTP, because RTP is helping you in revision of new concepts and old questions also. Okay. And for revision strategy, whatever we have studied today, we need to revise it on very next day. And then third day, because when you are studying on first day, it will take more time because you are reading it for the first time. Okay. And you are understanding, your time will be devoted more. But then when you are reading on second day, time will be less than half. And for third day, it will be 1/3 or maybe less than that. Because you have made your own notes. And with the help of that notes, you are able to revise it quickly. Fine. So when we are revising 3 to 4 days, it's set in our mind. And when after that, after 15 to 20 days, when you'll revise it, you will be able to quickly recap that. Okay. But some students, what they generally do, they do continuous, complete the audit subject for 3 to 4 days. And then they will take another subject. And after 1 month or maybe after 20-25 days, they'll again get back to auditing. Now, what will happen? What you have eaten today or day after, day before yesterday or 2 days prior, you will not be able to recall. Hai na? So, if you are revising again and again, continuous 3 to 4 days, and then you will take that after 15 days or 1 month duration, then also you will be able to recap very faster. Okay, so it will not take more time. You will be able to write and you will be able to revise fast. Okay, so revision is very, very important. Hai na? Planning, preparing, and then steps is in steps. Revision is very, very important, because if you are not able to revise, you will not able to write in the examination, because आपको उतना recall नहीं हो पाएगा. ठीक है? Then Beers for Your Success, our live learning classes are there, where in which of the any of the topic, if you are finding difficulty, you can refer those live learning classes. You can refer these 3 classes also, where we have practiced more and more question and we have tried to attend mock test paper, previous examination question paper. Fine. Then webinar for members are also being conducted. Hai na? For AASB or for ASB, webinars are there. It's on YouTube channel also. You can, if you are finding time, you can refer that also. That will give you insight of the topic. Then for auditing subject, annual reports are very, very important. If you are having practice of reading annual report, auditor's report, you will be having touch of practical aspects. Examination, what I am observing now, the paper pattern is based on practical scenario. So if you have referred annual report, if you have sincerely done your practical training, you will be able to write in your examination. Okay. Then frequently visit like ICI site. Okay. Then SEBI, RBI for bank chapter, NBFC chapter, insurance, for insurance chapter, you refer IRDA. So regulatory authorities for MCA. So these are the websites which are very, very important, which will not only update you for amendments, but also in case if you are confused with some content of study material or RTP, mock test paper or some reference books, you can refer that, because they are more authentic, and you can also come back to us for if you are finding any difficulty or for doubt. I think I have tried to cover maximum part. In case if you have any other doubt, you can ask me, because I would like to say, na thake hai pair abhi, ना हारी है हिम्मत, हौसला है कुछ बड़ा करने का, इसलिए सफर पे बढ़ते चले जाना है। ठीक है, एंड आर each and every step is very very important because a long journey starts with a single step. Fine. And so your each step should be in right direction. If you want to go to central region and if you are moving to western side, then you will not able to reach there. So please, please, please stop for searching shortcuts. Okay, try to cover in-depth study, have conceptual knowledge. It will help you a lot. Okay, I think any of the queries pending? I think I have tried to cover almost all the steps, all the queries. So students, try to practice as many as questions, and in writing when you will be practicing, read it twice and thrice, okay, and check with our suggested answers, our mock test paper answers. You can refer PYQs for that. In case, if you are still finding any difficulty, you can contact us through BOS mobile app. You can write to us. We'll be glad to assist you. है ना? So just think, डर तो मुझे भी लग रहा था इतना बड़ा फासला देखकर, लेकिन बस आगे बढ़ती चले गए रास्ता देखकर, मंजिल खुद ब खुद आ गई मेरे नजदीक, मेरा हौसला देखकर। अपने हौसले बुलंद रखने हैं, सही स्ट्रेटेजी अपनानी है। If you are planning to fail, you are preparing for fail. ठीक है? So prepare and plan. Both are very, very important part. So your preparation should be that you are prepared with each and every concept. है ना? And your planning is in such a way that all the ingredients are covered. If any of the ingredient is missing in such in recipe, then our success will be incomplete. So what are the important part? If we talk of success recipe, hard work, dreams, and dedication. 3 important ingredients for success are hard work, dream, and dedication. Okay. And for auditing paper, your planning, your preparation, your strategy, including revision, mock. For that, your ingredient should be a study material, any reference book where you are finding more comfort, but please ensure with the help of our study with our study material, and then this revisionary test paper, mock test paper, BOS live learning classes, BOS for your success, where we talk for your success recipe. We we interact with you for the difficulties you are facing and what are the important points which you need to take care. Then, so ingredients are very, very important. Then how you study. When you are studying, you make your own notes, your flow charts. Bulky book also, if you are able to understand, you have prepared your flow chart. If you are able to understand with the help of flow chart, with a pencil, you can just cut the part which is covered in theory, that yes, it is covered over here. You can highlight those revision points which are very, very important. The questions which are covering major provisions or where you are finding difficulty, and the questions which are coming repeatedly in the examination, that should also be marked in your diary or in your notebook. So then when you will be preparing, revising for your examination in 2 days duration, it will be very easier to you. It will be very easier for you to revise, okay, because you are prepared fully and you are prepared for that also, okay, how to go about, how to cover in 2 days duration of time. And then third thing, with the help of mock test paper, you are already strong enough. Whatever kind of question will be there, we will be able to write, we will be able to manage our time, we will not have any stress in our mind, we will be attending with more confidence, right? So it's very, very important, and BS is always there for you. In case any of the help, any of the assistance you require from our side, we are there for handholding. You already have my number. It's 0120-3045-925. You can use BS mobile app ask your query, for asking any of the doubt which is in your mind. You can send it to us. We'll be glad to assist you, because we also want your success. We also want our students to get good marks and come out with flying colors. So may you all fly in the plane of ambition and land on the platform of success. So with this, thank you very much. Thanks to Harsha for taking all the classes for our auditing subject CA final paper 3. He is not only having practical experience, but also very good faculty for us. He's very good resource person for us, and he's tried to cover as many questions. Okay, and one important point also I want to tell: don't be afraid of any new question in the examination which is being posed. Just remember one thing: in 100 marks question, if 20 mark question is new and we are not aware, still we are having 80 marks paper in our hand. And if we are afraid of those 20 marks, if stress levels in our brain for those 20 marks, then for 80 marks, we will not be able to write confidently. So whatever is our strength, please make it more strong, and with confidence attempt that 80 marks question. Because when I went for final first paper, I felt that I don't know anything. I am not able to manage. I will not be able to write any question. I should go. And then, because it was compulsory to sit for 1 hour duration in the examination. So I was sitting over there and started reading again and again, and I was able to write in the examination. Because of that particular question, I lost my confidence, but in that 1 hour duration, I regained, and I have done in the examination. So same way, don't lose your confidence, because it's very, very important to maintain your confidence level, because it's not like if for 100 mark paper, we are not having any question, we are not having idea. So just identify what is your strength, what is weakness, leave it. First, work on your stronger part, work on your strength, and then at the end, go to that part in which you are not confident. Because after attending 80 marks question or 60 marks question, you will be so confident that for that part also you will be having some ideas in your mind, and you will go in right direction. Okay, so that is also very, very important, because generally students, when they read new question, oh, it's no clear, oh no, it's on peer review, new question is there, it's merge of peer review and quality review in May 23 examination, how we will write this Caro 2020 question is also very, very difficult, we are not able to write for that. So maintain your confidence level, because okay, 4 or 5 questions are there, maybe it's of 5 marks, 25 marks question we are not aware, but still for 75 mark question we can work on it. So without losing any hope or confidence, focus on the stronger part and write in the examination. I'm confident that you will be able to get through. So with this, if Harsha, you want to add something?
No, ma'am, you have already covered in detail. Just one thing, all the best, guys, for your exam. Prepare well.
Yes, wish you all the very best. And BOS is always with you. We are for hand holding. If you have any doubt, you can contact us at any point of time. Okay, with this, all the best. Thank you very much.
Thank you, ma'am. Thank you, everyone.
Thank you, Harsha. Thank you, team.